Attention banksters, please report to the principal's office. So Bloomberg is reporting that on Wednesday during the market meltdown, when the Dow dropped 800 points in one day, the largest for 2019, that President Trump demanded an emergency phone call with bank CEOs. So the bank CEOs are JP Morgan CEO Jamie Dimon, Bank of America's CEO Brian Moynihan, and Citigroup's CEO Michael Corbat, the report said. So not only did the yield curve go, the full yield curve went inverted, because remember, there was a partial inversion back starting, I think, in May, and the yield curve went inverted. And I actually think I've never heard the mainstream media ever talk about a yield curve inversion before, and they've talked about it more in the last 24, 48 hours than I've ever heard in my life, and I've been paying attention to markets now a lot for a decade. But I think this report that Bloomberg got, and the article for Bloomberg, if you want to read it, is by Jennifer Jacobs and Jennifer Serene. I'm almost 100% confident that the bank CEOs and the upper executives they don't like Trump, and they just 100% leaked it to the media. So they didn't like how Trump demanded that they stop whatever they were doing and get on the phone with them and want to report. And this is how obsessed President Trump is with the stock market. He views, whether it's Art Laffer coming on Fox Business or CNBC, he views the stock market as his main and basically only report card. The plunge protection team had the day off Wednesday. Do you like my little joke there where I did the old school the speaker there where it's the bad microphone and it's like, please report to the principal's office. So I'm sure that's how the bank CEOs felt, because I mean, they make tons and tons of money. They make more money than Trump. And they don't like being told what to do, and then so their revenge was leaking the story now to the media. Just ridiculous, guys. But I guess in this day and age with social media, this is just more proof that the mainstream media doesn't do any real reporting, that a lot of the scoops, the reports are just leaks. This was not A+ investigative journalism by the Bloomberg people. Guarantee you what happened, and I've heard this happens before, and we know that a lot of the bank CEOs don't like Trump, is that either the bank CEOs themselves or their assistant or another executive made a phone call and said, look, Trump demanded an emergency phone call on Wednesday when the Dow was down 800 points, and we don't like this, and you should run the story, because everyone's looking for stories that are anti-Trump. Everyone in the mainstream media, that is. Well, what's funny, guys, is that CNBC used to be owned by General Electric. So CNBC used to be owned by NBC Universal, and then General Electric used to own NBC Universal, and then General Electric sold, I think, the last of NBC Universal to Comcast. So Comcast owns CNBC now. But I'm sure there's still people there who are loyal to General Electric, at least in a few people. His tweets stopped working Wednesday, so he probably calling the banks to get them to bid the market up. Well, the banks aren't supposed to do that. That's supposed to be like the job of the Exchange Stabilization Fund and at least a couple different plunge protection teams. Normally, the way the market manipulation occurs, it's with high-frequency trading algorithms now, and a lot of it is towards the end of the market close. It's in the last hour to 30 minutes of market close, sometimes in aftermarket, and all of a sudden these like $1 million, $5 million, $10 million S&P 500 E-mini futures purchase contracts come in. That's been one of the preferred ways. The other way is, and you see this now with the VIX, every time the VIX pops up, the best analogy I can think of with the VIX is the game whack-a-mole. This is a bunch of adults that manage money that like to play whack-a-mole. And the VIX is the whack-a-mole. So every time it pops up, the goal is to just whack it right back down. We are going to see 1,000 point swings soon. 800 points is just a prelude. Yeah, probably. We're going to see a lot more volatility, but they've been trying to manage the VIX. And that's because of how much leveraged money is in the VIX. The VIX trade is well over $1 trillion. So if the VIX blows up, there will be hedge funds, like there will be at least a couple long-term capital management type of situations if the VIX were to blow. If the VIX were to go to say 60, 70, 80 higher and stay there, there would be insolvency. There would be enormous margin calls on the VIX, on these hedge funds and investment banks that have sold enormous amounts of leveraged shorts on the VIX. But for now, I think the whack-a-mole game is still going to work. If I was trading the VIX, and I'm not trading the VIX, but if I was trading the VIX, I would take profits when I had 30% moves. I would take money off the table, and then when the VIX got smashed, I would just rebuy, because that seems to be the game. I would not expect the VIX to just go up to 50 or 60 and then keep going up or stay at those levels. The people who are short the VIX and the leverage short volatility trade, the trade 3 years ago was over $1 trillion. I think 3 years ago it was over 1.5 trillion. So it's probably even larger than that now. Yeah, I've been saying that about beggar thy neighbor and financial repression and Japanification. I've been saying that for a while. But the real economy, you guys on Main Street, you guys are suffering from stagflation. All your food prices, consumer staples, healthcare, rent, all these things are going up, and your incomes are not offsetting that. If you are getting an income bump, the average income increase was only like 4% in the last like 12 months or something. And even retail now, the retail companies like Lowe's and Macy's, the numbers are bad. People are like, oh, people are shopping online. Well, the majority of people that are hired are at regular retail stores. So that means more people are going to get fired. Where can you read up on Deutsche Bank and HSBC? Go back in my archives from the last 6 weeks, and I have Deutsche Bank videos, and I have articles from people who cover Deutsche Bank extensively. So go look up, I did a chart showing all the manipulations where a falling knife was caught in Deutsche Bank, where Deutsche Bank share price would have collapsed sooner many times. It was, I think, over 15, might have been over 20 times where the chart was manipulated. So go back into if you're new to my channel, go back into the archives. I have Deutsche Bank coverage from the last couple months. I have a number of videos that have a lot of views, and there's articles in the information and description section. There's a few websites, really good blog websites, people that used to work in the financial industry, and they cover Deutsche Bank extensively. Their articles are in the information and description section of a couple of those videos. You know, General Electric, there are a lot of other General Electrics out there. There are a lot, because these stupid, greedy, short-sighted, myopic executives in the C-suites of these corporate financial companies, they knew that they could not create new products and services, and they were focused only on the short term, and they stupidly used debt. So there will be a lot more General Electrics. And that's why you have these emergency meetings about the corporate bond market and about the junk bond market with the Federal Reserve, the Treasury, the FDIC, you know, all those guys. That's why you have those emergency meetings. So I just wanted to do this short little update. If you like this video, please hit like. If you like my little goofy principal's office recording there that I did at the beginning, maybe go back and listen to it. You'll get some chuckles out of there. Yeah, the incentive structure, guys, for corporate governance is totally broken. I would like to see the shareholders and the board of directors redo corporate incentive structure to where if the company creates new products and services, new markets, and invests in research and development that would benefit society and also create more sustainable long-term moats, that should be rewarded. But, you know, I don't see a lot of companies doing that for a while. I think the system may have to crash first. And again, I have almost, I think it's 100. It's either right under 100 or 100 now Patreon account contributors. So I'm glad you guys like how I'm doing these updates, these shorter videos. I was actually not planning on doing this video, but then I just saw that story. So President Trump, it's pretty clear to me that besides rate cuts, and it looks like a lot of people are expecting the Federal Reserve to do another rate cut very, very soon, because we are in a currency war, and beggar thy neighbor. The people in power, at least, are deciding that we're in a currency war and a trade war. I was just planning actually today on doing a lecture about the nickel market and investment opportunities and research on the nickel market, because we've gotten a couple listeners asking about that. So the demand for electric vehicles is growing very, very rapidly. Whether you think Tesla is going to fail or not, the demand for electric vehicles is growing rapidly. There is a lot more regular car companies coming out with very good electric vehicles in the next 5 to 7 years. And it looks to me, the research I've done, it looks like that nickel is more important than lithium. Rick Rule agrees with me. He was telling me that years ago in Toronto, 2014 and 2016, when Sprott flew me up there. Rick Rule was adamant, even though nickel was in a bear market at the time, that nickel was going to be, that the lithium-ion battery was really a mostly nickel battery. And I'll talk to you about the facts and figures about why the lithium-ion battery is mostly a nickel battery. Okay, guys, well, I'll talk to you guys in a little bit with the other lecture. I'm going to go take a break. Just wanted to get this short little update out there for now. And I'll attach links to the story, the Bloomberg story, if you want to read about it more. But it looks like the bank CEOs gave Bloomberg some anti-Trump ammunition and information so they could do this and make Trump look bad. But I think it's very, very clear now, with this phone call and some of the other evidence that, and his tweets, of course, that Trump, his main priority now, his main scorecard is the stock market. Okay, guys, bye for now.